author of One Rental at a Time. And this is, of course, your daily financial news. First and foremost, yep, this is Jimbo. He's on my shoulder. He's fussy this morning. We've been up since 4 a.m. trying to figure it out. My hope is he is asleep by 7:30 Pacific because we talk with one of our experts at 7:30, Jonathan Twomley, and I'm hoping he's sleeping by then, but we shall see. First and foremost, also want to call attention to a video I did yesterday with Anna Kelly. I think it was, frankly, not your normal real estate show. However, it is real life. Both Anna and I kind of shared our experience, what has led up to both of us taking on the 75 hard challenge, both for the physical and mental challenges. And I thought that interview really wasn't an interview. That discussion was just a lot of fun. So I think that was posted yesterday at 4 or 6 or something like that. So if you are like myself and Anna, and over the last year, maybe you've gained a little weight, maybe you've let your mindset get a little disfocused, take a listen to that because both Anna and I get real with you and share, we each have challenges and we needed something to wake us up. So take a watch of that. First and foremost, the topic of the day, everybody's talking about GameStop or AMC or all these other things and whether it's right or wrong. A couple of things. First and foremost, the retail investors got one on the hedge funds. There was a hedge fund, at least one, if not multiple, that thought it was a good idea to take a stock and short it to 140% of float. I am ecstatic that people call that out as stupid, and then they piled in. And near as I can tell, that hedge fund now had $5 billion in losses, and they need a rescue package from their investors. So frankly, when you do something stupid, you should get punished. In addition to that, I believe this is showing the power of the retail investor. What Wall Street has had on the retail investors before is they've been pretty focused. They can have their idea dinners or what they call them, and then they can move mountains of money. Individual retail investors don't have that privilege. However, technology, applications, Reddit, forums, all of this is now creating I'll call it a more level playing field. It still takes a lot to get the masses going. So I think it's a great equalizer. I think the market will be better for it long term. That said, I think the GameStop play is over. And I talked about it yesterday. What is going to happen, or at least I suspect will happen, is Wall Street will call uncle at some point. And some Wall Street firm will flip sides of the table and no longer be short, but go long to really put on the pain for the Wall Street firms that are late. But more importantly, it will be that final blast off rally to the high. And that could have happened today pre-market where I think it hit 500 or something silly. And then they will flip the sides. They will make money on the way up and Wall Street will make money on the way down because the individual investors will fragment. Right, will disperse. And let's be clear, the stock price of GameStop today has nothing to do with the business of selling video games. Long term, the business cycle, the income, the cash flow, all of that will make sense and the stock will be fairly valued. However, in short-term windows, any stock could be run up or run down just by the masses, right? I think Warren Buffett says any stock could be pushed by a popularity contest, but long term, it is a weighing machine. And right now, GameStop stock is not the company, and the company is not the stock, if that makes sense. The last thing I would tell you, if you're in the stock and you've made some profit, please, at a minimum, take your initial capital back. If you want to run it forever and own forever, please at least get your initial capital back. That way, if you lost everything, you didn't really lose. I speak from experience. I had run-ups like this in the last 99, and I stuck around too long. I should have at least taken my capital back or sold half my position or something. Yes, I would have missed some of the run up, but boy, I would have been much, much better off if I didn't stick around the party too long. And it will happen. I want to remind you, this is what, retail investors broke a hedge fund. This has been going on in the financial industry for a long time, but the individual investors have not had the power. They haven't had the platform. They haven't had the vehicle to organize. And I want to call you back to 1992. 1992. A much younger George Soros. He took on the Bank of England and he broke the bank. He was essentially doing what these Reddit users were doing to the shorts. He was taking the other side and applying gargantuan leverage. Eventually, the Bank of UK or the Bank of England folded, and George Soros made $1 billion. Folks, he made $1 billion in 1992 when that was really $1 billion. I did some quick math. Actually, I should say I did a quick Google search. And taking $1992 into 2021, that would be $1.9 billion. So if you want to talk about inflation or deflation or whatever, in 30 years, the dollar's almost collapsed 90% or whatever that is. So again, I think it is a great equalizer. I like it when the retail investors get one over on Wall Street. It doesn't happen often enough. And maybe this is a trend going forward. Maybe we have found a way for the retail investors to kind of keep Wall Street in check when they do something stupid, like short a stock 140%. We'll see. I'm going to be standing on the sidelines applauding. I'm not going to get involved in any of that, but it's fun to watch. Next, it is Thursday, and of course, we need to talk about the new unemployment claims. They were slightly better than expected, but still disturbingly high. They were 847,000. I think that marks like the 47th week in a row above 666. That number is important because that was the peak of the Great Recession. 847, man. Oh, by the way, last week was actually revised up 14,000. So no longer was it 900K, it was 914K. Total people receiving claims jumped 2.29 million. That is because of the stimulus package signed there at the end of the year. 2.29 people back on unemployment because they'd already exhausted 39 weeks. Folks, that is pain. There are parts of the economy not working. GDP for the 2020 Q4 came in light. It came in at 4%. Expectations for 4.5. Good news is on this channel, we talked about it coming in light. The retail investors retreated. If you don't remember, we were very suspect about that next stimulus for much of Q4. We talked about the K-shaped recovery in retail and Christmas and about many people not having Christmas. This is what happened. For the year of 2020, the first print is a down negative 3.5%. That is the worst year in the U.S. economy since World War II. That sets us up for what I believe will be a blowout 2021. Q1 will start slow, but Q2 better than Q1, so on and so forth. I think we are going to start to see a trend. I think the consumer is a predictable bunch. Without question, GameStop, AMC, Bed Bath & Beyond have proven that if you can find a highly shorted stock, you can apply pressure and get a stock rise. I say this because I see another one already popping this morning, American Airlines. Folks, the airline industry lost like $30 billion or something stupid last year. But it looks like the stock is up 50%. Why? I suspect, and I haven't validated this, but I'd put $1 on it. American Airlines is likely the most shorted airline stock. Usually speaking, the most shorted stock is the worst of the bunch. But if you look at the stock market today, it'll be performing the best, which is kind of odd. But again, hey, it worked with GameStop. It worked with AMC. It worked with Bed Bath & Beyond. So I guarantee you, Lots of people, thousands, hundreds of thousands of retail investors are scouring their apps, their Reddit pages for the next shorted stock. I expect this to move to REITs and other things, and it will run too long and too far. There are just some industries, some stocks that will go to zero. It's just how it works. I'm starting to see some discussion about retail stores in 2021. The first article is negative. It's talking about 10,000 retail stores closing their doors permanently. I look forward to the articles, and maybe they'll start in Q2, where we talk about record grand openings. Now, I'm obviously optimistic. I'm obviously probably early, but I like being happy versus depressed. We will have record grand openings. Is it Q2? Probably too early. Q3, Q4? Maybe. But certainly by 2022. This engine, this economy, this bastion of consumerism will start cranking again. The question is when. Earnings announcement that kind of surprised me yesterday was McDonald's. McDonald's actually missed both top and bottom. Ouch. They were very clear to blame Europe, Italy, Germany. Many of the European countries or big cities went into lockdowns, significant lockdowns. McDonald's did their best to say, hey, North America, specifically US, is okay. Same store sales up 55%. I don't know. Who knows? And then the last topic, Mark Cuban. So a lot of you know Mark Cuban. He's on Shark Tank. He's the owner of the Dallas Mavericks. He's on CNBC all the time. You may not know this if you don't know Mark's history, right? So yeah, Mark's a billionaire. Good for him. During the 1999 craze, I think his company was called broadcast.com or something like that. He sold it to Yahoo for like 3.3 billion or some billion-dollar numbers. Most folks that don't know the story think that's how Mark made most of his money. That is inaccurate. That is wrong. What Mark did, because the stock transaction in whatever it was, 99 or 2000, was all stock. Yahoo stock was trading, I think, at $90 or $91 a share. And that was the currency that did the acquisition. So at the end of the acquisition, Mark was sitting on, I don't know, $1 billion or something of Yahoo stock at $89. But folks, go look up Yahoo stock. It went all the way down to $8 or $6 or something because it was overvalued. The eyeballs in the business, it was getting crushed by Google and Microsoft and all these other players. So how the hell can Mark Cuban make all his money when the stock was traded or got at 81, it went to 6? He hedged. He made more money on his hedge than he did with the acquisition. Think about that. He hedged the downside. He protected the downside and cleaned up. I bring this up because Mark said yesterday, I read it this morning, that he is hedged. I'm going to quote him. Hedged the heck out of his portfolio today. What does Mark know that we don't? Maybe Mark has PTSD from the last crash. I don't know. But he has put on another hedge to protect the downside. It's worth at least thinking about. So again, that's what I got for you today. Again, this is your daily financial news. We will do it every other day except Thursday at 7:30. We do Thursday at 7 because, of course, we bring on one of our experts, Jonathan Twomley, at 7:30. Have a wonderful day. Take care of yourself. Bye-bye.